Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we're doing a deep dive into Microsoft, ticker MSFT. We're using our research capture just on October 27th, 2025. And the central question really is this. Is Microsoft's huge AI push, the whole Copilot thing, strong enough to outweigh this growing legal risk around its pricing? Let's dig in.
Yeah, it's a good question. And what's interesting, turning macro, is that the broader economy is actually giving Microsoft quite a boost right now. The NASDAQ Q's leading things higher. Yeah. And it's fueled by this unusual mix, right? You've got stimulus talk from the White House and hints of rate cuts coming from the Fed. It sets up this really supportive low-rate environment. Tech companies, especially the big growth ones like Microsoft, they tend to love this setup.
Right, and Microsoft is definitely seizing the moment, aren't they? They've been so aggressive embedding Copilot AI into, pretty much everything. Windows, their cloud services. It feels like they're really betting the farm on AI being the main engine for growth going forward.
Absolutely betting the farm. But that exact strategy just hit a bit of a speed bump. There's this lawsuit that just got filed by an Australian consumer watchdog, and it specifically targets alleged misleading pricing, linked to those AI subscriptions. Now, it's probably not a company killer, let's be clear, but it is immediate headline risk, and it signals, maybe, that regulators worldwide are starting to look closer at how Microsoft is pricing all this new AI stuff.
Headline risk. But here's what really jumps out from the research, this stark contrast. Wall Street analysts, they seem to be completely brushing off this risk. I mean, all 58 analysts covering MSFT rated either buy or strong buy. 0 holds, 0 sells. That's like total conviction. But then you look at the price. It closed Friday at $523.61. And our own fair value model puts it at what? $536. That's barely any upside left. So my question is, isn't that unanimous buy rating maybe a warning sign itself? Like, are they just cheering on a stock that's already run its course for now?
Well, that's the million-dollar question, isn't it? It really depends on perspective. Analysts, they're likely looking at that Australian lawsuit and thinking, financially it's pretty minor, almost immaterial compared to the massive revenue they expect Copilot to generate, especially from big enterprise deals. They probably figure even if there's a big fine, the projected profits will just swallow it whole. So they're essentially discounting that legal risk.
Okay, so analysts are focused on the long-term potential, ignoring the noise. But if the valuation is tight, where does the market itself see the next move? What are the mechanics telling us?
Exactly. And the options market gives us a pretty clear signal there. It's leaning bullish. The put-to-call ratio is way down at 0.6, super low. That basically means for every 10 traders betting on the price going up with calls, only 6 are betting on it going down with puts. That's strong bullish conviction right there. And we're seeing this huge pileup of contracts right at the $550 strike price. That's acting like a big target, a magnet for the price. Plus, there's a clear safety net people are watching near $510 on the downside.
Oh, and almost no one is shorting the stock. The short flip is tiny, like 0.7 other percent.
Right, and the chart backs that up too. MSFT actually gapped up this morning in pre-market, hit $528. All the trend indicators we look at, short-term, long-term, they're all pointing firmly up.
And importantly, the quality of this upward move looks solid. Money flow indicators are showing that this price rise isn't just retail speculation. It's backed by real buying pressure, likely institutional money coming in. And you combine that buying pressure with the fact that volatility has actually been pretty low recently. That often sets the stage for a bigger breakout, especially when the fundamentals underneath are strong like this.
Okay, so pulling it all together, what does this mean for you listening? Our strategic outlook for Microsoft, based on everything, is cautiously bullish.
Right, cautious mainly because, that valuation is stretched, no doubt about it. And this new Australian lawsuit, that's a genuine headline risk that could, spook some investors short term.
But the bullish case is just overwhelming, really. You've got that unanimous analyst support, you've got the positive options bets, the rock-solid technical trends, which that pre-market gap seems to confirm, and then there's that whole macro tailwind from potential stimulus and rate cuts. It's a lot of positive factors lining up.
So for the next few trading sessions, here are the levels to watch. That $530 mark is the immediate battleground. If it breaks convincingly above there, the target really becomes that $550 options level. Initial support. Look for Friday's close, around $523 to hold. But the really critical level, the point where this whole bullish idea starts to break down, is down there at $510. A move below that would be a major warning sign.
So it sounds like even though Microsoft's AI might be getting an unexpected lesson in international law, the stock itself seems pretty convinced its main job is just to keep heading, up and to the right.
That sums it up pretty well. The market seems to think any fine is just the cost of doing business at this scale. Okay, that's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.